Hi, welcome to the Market Alert for Monday, 1st of July 2019. So the headline, excluding Fridays, so this is certainly taken precedence over the weekend. Trump makes history as the first US president to enter North Korea and announces the restart of nuclear talks with the Korean president. So let's see what the impact has been on the markets. We'll start with the Dow. This is Friday. We saw some selling to begin with, the market breaking the 200 bar moving average till we saw the market tested. We then get the retracements, and we're seeing quite a few retracements here, and eventually the market trading up to the 200 bar moving average. And again, notice here how the market bangs its head against this line, then eventually breaks. However, the no follow through in the buying, and we see prices come back down, and then they drift down and lower and lower. And then just before the close, we get a message from Powell, and we see the market spike back up to the upside there. But a fairly quiet day, and you can see the range there is only 100 points, so quite quiet. But yesterday, Trump apparently dropped in on North Korea back from Japan from the G20 meeting, and this has obviously had a major impact for the market, because any news is good news as far as the market is concerned, of keeping those prices on the high. And we see the market gap higher. Doesn't quite fill the gap here with this price bar, but generally the market will fill the gap. But at the moment, the market continues to move to the upside as the European markets open up and come on board there. So when we look at the daily chart, we can see that we're going to have this market moving higher in the pre-market session. If we break the 26,911, which is last week's high, then we go to the weekly chart, which is what we need to do now to see where the all-time high is. You can see they are absolutely desperate to get this market through this level, and they will pursue this as long as they can until the market fails to move higher. The market is seriously overvalued, but that doesn't matter. And with the 1st of July today and going forward, then the main agenda for news this month is going to be the Fed lowering rates as well. This will be the first time in history that the Federal Reserve will have actually lowered interest rates when the market's at an all-time high as well. So another first. And it's certainly going to be interesting to see how the market reacts to this. I think it's a very dangerous play, personally, because it may be good to start with, but then when it starts to sink in, that hang on a minute, you know, we're actually reducing rates now when unemployment is actually at its lowest on record. It's a major problem. And also now, as we've passed midnight, we are now into the longest expansion in history, just over 10 years. So again, everything pointing towards there is going to be problems down the line, but you've got to suck the sheeple in and get them buying on the highs. Now this week is also Independence Day celebrations as well, which is going to be the 4th, so that's going to be Thursday. So we'll again keep this in mind as well. But as far as today is concerned, this is just the regular economic news, but it's the Trump tweets, as I keep saying, that are going to define what happens here today and if the market gets to the all-time high there. Now, another update here. I have actually gone back to doing the implied in the spreadsheet and doing a lot more analysis, spending a lot of time on this, and it's absolutely fascinating. I will record some separate videos on this. But here you can see where we currently are and why the market stopped at this level. If we just scroll down a bit, I've actually created tables below this as well, showing the percentage increases and decreases at these points. And as I've always said, if you get to within 80 to 100%, as we did here, you will see the market stop and then reverse and go back to the upside, just as much as when we get down to the lows of 10%, which you can see here that the market will then correct as well. the moment we're in no man's land, but given the fact that the market is moving sharply to the upside, we're going to see this drop off sharply as well. So no crash coming until we get the implied volatility back down to these levels, or big correction, whatever you want to call it. And the market having retraced more than 50% in these areas here as well is also indicative of the market moving to the upside as well. This is something that I've looked at since 1994, and now I've actually got it into some sort of format where I can see the two together and actually calculate the retracements. Then it's going to be an invaluable tool going forward as a predictor. It doesn't predict to the day. It's a bit like the yield curve. It gives you a background to what the market is likely to do. So more on this as it unfolds. It's the best way at the moment until I can record a video on how it all works. But basically it's simple as this. The simple rules: when the market gets to 10% or below, the market will correct. And once it starts to correct and the price of the options go up, as long as the market doesn't retrace more than 50%, or just 60%, I think is more accurate, and probably 76% to be honest, then you will see another spike to the upside and another move to the downside in the underlying market before the market then moves to the upside. And what's even more fascinating, I have this data going back to 2006, and that is exactly the same pattern all the way through. And again, that's something else I'm working on at the moment, is actually putting all of the charts together to show you this repeatable pattern occurring for the last 13 years worth of data. But like I say, I've been looking at this since 1994, so it's a very powerful tool indeed. And all right, let's have a quick look at the pound. Not doing a lot, not going to spend much time on this. Too quiet at the moment, as you'll see here, very sideways. During Friday, eventually the market broke out of the 200 bar moving average and moved higher. All the news really is yesterday in Bitcoin, and also on Saturday as well. Let's just wind this back a bit more. See the Bitcoin, this is the 15-minute chart. And as I said in Friday's market alerts, watch prices coming back to the 200 bar moving average and then closing back. Here you've got 76% retracement before the market moves higher. Plenty of trades on the buy side once you had the correction in the daily. We get a correction down towards the 200 bar moving average and then higher. And then Sunday, different ball game altogether. We see the market breaking the 200 bar moving average, with prices coming back towards the 200 bar and then trading sideways with two sell signals here, and then selling off sharply mid-afternoon before the market retests here and then tries to work its way back. But at the moment it's in the Asian market, so we've had another low, and at the moment it's currently short, but attempting and trying, it isn't selling off at the moment, to move back to the upside there. So let's have a look at the daily chart, and you can see over the weekend there we've got prices more or less sideways. Friday up, Saturday holding its own, and then Sunday down and correcting, but sort of stuck in a bit of a sideways range, but not selling off to any great extent there at the moment. Okay, that should do it for this one. Oh, actually, a quick look at Deutsche Bank. The reason this market's been moving to the upside is because apparently and miraculously they have passed the annual stress test, the banking stress test that was brought in after the 2008 crash, and that's why it's up at the moment. Let's see how long it holds at these levels. So again, any news that's they can interpret as positive, they're going to use this at the moment to move the markets to the upside, and that includes Deutsche Bank as well. Heading into July now, I think it's going to get very interesting going into the summer months as far as the markets are concerned. Okay, that will do it for this one. If there is anything else to report, I will let you know, but otherwise let's see what the Trump tweets do today for the Dow. And with that, thanks for watching. See you in the next one.